Good day to you, traders. It's Tuesday, February 15th, 2022. Hope you had a happy Valentine's Day yesterday. Today we're looking at Uber. It's got 4 drops of liquidity, an IV rank of 53, and it is moderately strong positive correlation to the SPY. While I'm covering this right now, I want to quickly take a look at the futures overnight, and it does look like the market is responding overnight futures-wise positively to maybe some improvement in the Russia-Ukraine area. So hopefully that will benefit everybody in all ways. So anyway, we're going to put on a bracket order today in attempts to hit the tasty trade mechanics. So if you're interested, join us as we hop in to Thinkorswim. Hi, everybody. My name is Neil. This is Option Theory. And on screen here, you can see we're inside of Thinkorswim using simulated trading to get all the learning without any of the risk. And if that sounds like something you're interested in doing, hopefully someday you'll subscribe and you'll have a trading partner where we can take trades emailed to us from Tasty Trade and see if we can make it a profitable trading business. All right, on screen, you can see we got the chart pulled up for Uber, and it had earnings recently, and it dropped on those earnings, and it seems to have hit recent support. Let's call that support. You know, it's been there 3 times. Is that your M for murder, and then it's going to go down now? I don't know. It's not... It looks like that could be a shoulder and a head, and then maybe another shoulder, and if that's okay, like if we're about to make another shoulder, then hey, we're on our way up, right? So that'd be cool. Either way, we're going to try setting up a bracket order to get out when we hit our target and get out if we take a specified amount of loss. And it's always good to practice that stuff, right? So let's go over to the Analyze tab, go to Add Simulated Trade, and the trade has us in the March 25th weeklies. Not my favorite. I think I would have opted for the March 18th monthlies for this trade. But I'm going to, analyze it the way it was sent to us. So we're looking at selling the 29 put here, which is an 11-cent wide bid ask. It only has 15 open interests. So I put in a limit price of 70. And I went, and of course, the contract size for us is 1. Yours is defaulted to 10 if you're new to this. So just make sure your order size is appropriate for your risk tolerance. Then we'll go to risk profile, and you can see that in the top right corner, I've got March 26, which matches the March 26 blue expiration date you see in the bottom left corner of this risk profile. With that, then I clicked on this little menu button here, which is now lit up. You can't see my mouse for some reason, or at least I don't think you can. There it is. That's going to help us. We choose set slices, and you go to break even, and we set 326. And now we've got what I call the goalpost at expiration. It's an 83% probability of us making a profit at expiration on this trade. Of course, it's going to be that high probability. The trade-off for that is high risk. So we could lose a decent amount of money on this trade. So our break even is roughly, let's see, what's that, 28.29. So that's about as much as we could lose, $2,800 to make 70. Now, that is not a great return on capital. I totally understand that. You can get a much better return on capital and a lot lower, potential loss if you do a short put vertical. So that is an option if that helps you sleep at night. But hopefully we're going to use this bracket order to help give us some peace of mind, though it's not a surefire savior. But with that, we know what this trade's going to look like. I want to go over to the trade tab where I have set up this bracket order here. So you can see what we're doing is we're having the short put. We'd like to get in at 70 cents. Once that happens, it sets up a good till canceled, and I want to change that to good till canceled. A limit order of, hey, as soon as I can get 35, or if I can buy this for 35 cents, then I want to get out at 35 cents. If, however, things go south on me, right, and Uber goes down some more, I want to get out when I get to 2 times the credit received. So that would be $1.40 is 2 times the credit received, plus the 70, that makes this. So that's how we get out at that tasty trade mechanic there. How did I pull that off? All you have to do is right-click on the cell, choose Sell Custom with OCO Bracket, and then you'll get this trade right here. So I'm going to go ahead and hit Confirm and Send. You're not going to see the window that pops up, so I'm going to show it to you here. It's bigger than normal because it's come on. No? You're not going to work with me? Okay, I can't grab that bar because it's like off the screen somehow. I don't know how that's possible. I can't grab it even down here. Okay. What it's telling us is order the 3 different orders that we have here. That's our entry order, and these are our good till canceled exit orders. And if one happens, it cancels the other. Maximum profit of $70, max loss of $2,830. And we know that we stand to lose $140, air quotes, at maximum, right? Because we know it's a market order at that point, and depending on how fast things move, we could lose more than that. All right, I'm going to go ahead and hit the send order, and that puts that into my simulated trading orders. Hopefully, honestly, I kind of want to get tested. The probability of us having a touch on a trade like this, which has a delta of, give me a second, because it's not on that trade tab, but we are at a 15 delta. So there's a 30% probability of Uber touching 29 in the next 38 days. All right, that's it for today's trade. Big thumbs up to you for watching it this far, if you even are still here. If you are still here, 2 thumbs up. Boom, 2 thumbs up. Appreciate that. And yeah, until next time, may the market be with you.